Hello everyone, welcome back. This is the third of our ACCA F8 lecture recaps. This is a recap of the full course lectures available on our website. And do remember, all of our mind maps are available to download for free on the website if you want to do so. So it's mapitaccountancy.com. So looking first of all at the Audit Committee, we were talking about governance. The Audit Committee we know is recommended by the Corporate Governance Code because we talked about it in the last session. So the members, first of all, remember they're all non-executive directors. So 3 non-executives is the standard for an audit committee, but perhaps 2 in a small company. So small company with an audit committee can get away with just having 2 non-executive directors on the audit committee. Remember that one of these directors must have recent, relevant financial experience. Absolutely crucial. Learn that. Must have that recent, relevant financial experience. The objectives of the Audit Committee are to increase public confidence in the financial statements because the information that's coming out will have been looked at by the Independent Audit Committee. Also, they'll be there to help the directors because those non-executive directors have that expertise, so they can help the board of directors. They'll also help to give independence, number one, to the external auditor, and also to ensure that there's communication between the external auditor and the directors. So the function of the Audit Committee, remember, is to monitor the financial statements, to review internal controls, to review internal audit, and we'll look at the relationship between Audit Committee and internal audit throughout the course, and also to recommend the auditor. Remember, they don't appoint the auditor, the external auditor, that's done by the shareholders, but they do recommend that external auditor to the shareholders. They also monitor the external auditor to make sure that they're doing their job. Lastly, the Audit Committee provides that whistleblowing function, that independent body that people who discover anything going wrong in the business can go to. So the pros and cons when it comes to the Audit Committee. On the plus side, we get that independent reporting for internal audit. We also ensure that management can be checked to see that they're implementing the recommendations of both internal audit and external audit. The directors can get that help if they need it. There should be better communication between the external auditor and the directors because the Audit Committee can be the go-between. It increases that public confidence in the information coming out of the firm. And you should get a stronger external audit function. On the downside, well, the directors may distrust the Audit Committee because they feel that maybe some of their power is being usurped. So the directors may distrust them. The non-executive directors may be overburdened. Remember, they don't work in the business, so you don't want to put too much onto them because they may not be able to do all of the work. It also can lead to a 2-tier board. And we looked at time and cost. Remember, that's a big problem when it comes to audit committees. We then went on to look at the relationship between the Audit Committee and internal audit. Remember, first of all, the Audit Committee provides access to the board for internal audit. They also review the work of internal audit, and they will make sure that any results of their reports are implemented. So internal audit will report to the Audit Committee, and the Audit Committee will make sure that those results are implemented. They also meet with the head of internal audit at least once a year with no management present. Lastly, they monitor the effectiveness of internal audit. So that's a relationship between the Audit Committee and internal audit. And we looked at an exam question to see how audit committees come up in the exam. Moving on then to internal audit itself. Well, what do they actually do? We know that they're going to provide assurance just like the external auditor does. But whereas the external auditor is looking solely at the financial statements, internal audit will look at other areas. They look at the systems to make sure that they're operated effectively. They look at the effectiveness of internal controls and provide assurance over those. They make sure that procedures are being followed within the firm. They make sure that the information coming out of the system is reliable, and they make sure that the corporate governance codes are being followed. So they're still providing assurance just like external audit, but they're doing it over systems, compliance, internal controls, procedures, corporate governance, those sorts of areas. How do they go about doing this? Well, remember that they carry out assignments and produce reports on those assignments. So to be effective, they must have, first of all, independence. So they must be independent, which will relate to the seniority of the head of internal audit, their standing in the company, and a whistleblowing function that they should have. They also need to be well resourced to make sure that they can carry out the work. And they need to have organisational skills. They need to have competent staff, and they need to have work practices to make sure that they're undertaking their role effectively. The limitations of internal audit, well, when it comes to reporting, they may report to the financial director. That would be a limitation. They should report to the Audit Committee, so look out for that in scenarios. The scope of internal audit, if it's set by management, that's a problem. It should be set by the Audit Committee. The head of internal audit, are they appointed by management? If so, it should be done independently, because remember, we need an independent view from internal audit. So if they're constrained by management in any way, that's going to be a problem. Another problem we looked at with internal audit is self-review, if they're reviewing the same area of the business over and over each year. So what you need to do is rotate your staff. Make sure that they're not looking at the one area over and over every single year. They look at different areas each year. And we looked at illustration 2 to reflect how that comes up in the exam. When it comes to outsourcing, you can outsource your internal audit function to say for example, one of the big 4 auditing firms. On the plus side for this, well, they will focus on cost and efficiency. Also, they'll have expert staff. The risk will be passed on to the outsourcer. They should be more independent, but remember, they will want their contract renewed, so may not be that independent. They'll be up to date with technology and methodology, and they'll be able to do things on a more timely basis. On the downside, when it comes to outsourcing internal audit, well, there could be a conflict of interest because, as I've said, the outsourcer wants their contract renewed. Also, there can be pressure on independence for that same reason. There can be culture problems where the outsourcer doesn't understand the culture within the firm. It may not be cost effective, so they may charge very high fees, which can cause a problem, and you do lose control of your internal audit function. Lastly, it can blur the distinction between internal and external audit. To the people working in the business, they will both look the same if both are outsourced. Safeguards that we can have over this outsourcing, well, first of all, control of the contract, making sure that it's stipulated exactly what the outsourcer needs to do. Regular reviews of the contract to make sure that everything that should be provided is being provided. And lastly, setting clear scope and responsibilities for the outsourcer. So that was our third lecture on governance, looking at the Audit Committee and internal audit. As I've said, you can download this mind map for free on the website, or indeed the full course if you want to get into more detail on these areas and indeed look at all of the illustrations and run through them with me.